Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets a company tries to hide in plain sight. And today, ProPhase Labs is dropping a big one, a report full of financial maneuvering and strategic decisions that could shake things up for their shareholders and the market. So ProPhase Labs is making some serious moves, announcing a private placement deal that's essentially them bringing in cash through selling convertible notes and warrants. Now, this isn't just pocket change. They're talking about a total investment of $3 million in exchange for these convertible notes. Let's break down what this actually means for the company and its investors. They're issuing senior secured convertible notes and warrants. That sounds complicated, but think of it like this. The notes are like a loan that can be turned into ownership, and the warrants are like options to buy more ownership later at a set price. The company is getting cash now, but they're also setting themselves up for future share dilution if these notes are converted or warrants are exercised. This is a common strategy to raise funds, but it's a balancing act between getting what you need now and potentially diluting existing shareholders later. They're bringing in $3 million in investment, but due to something called original issue discount or OID, the actual face value of these notes jumps up to $3.75 million. This means the company gets $3 million upfront, but owes back $3.75 million later if the notes aren't converted into stock. Think of the OID like a built-in interest payment upfront. It reduces the amount of cash the company gets immediately, but increases the amount they have to repay later. This is a way to make the deal more attractive to the investors, especially if the company is seen as higher risk. After some fees and obligations, the company is actually walking away with about $275 million. While it's less than the $3 million investment, it's still a significant chunk of change for them. So what's this money for? Primarily, it's going to the company's day-to-day operations, general business needs, and paying down debt. This is pretty standard stuff, but it tells us that ProPhase Labs needs this cash to keep the lights on and pursue its business objectives. These notes are set to mature in July of 2026. That's about a year from now, and they'll be paying 10% interest on the original face amount. That's a fairly high interest rate, reflecting the risk investors are taking. Now, about those warrants, these give the investors the right to buy ProPhase Labs stock at 50 cents a share, and they have 5 whole years to decide whether to do that. This is where the potential for dilution really comes into play if the stock price goes above 50 cents significantly. Here's a really interesting part about the convertible notes. After a 4-month waiting period, investors can convert their notes into stock. The conversion price is pretty sweet. For them, it's either 80% of the average stock price over the last 10 days or a fixed maximum price, whichever is lower. Now, the company explicitly states this is not a death spiral or toxic convertible structure. They've put in safeguards to prevent the conversion price from dropping endlessly and to limit huge chunks of stock being converted all at once. This is a big deal because those toxic structures can really hammer a stock price. However, there's a catch, and it's a big one. The total number of new shares issued can't exceed 1999% of the current outstanding shares without shareholder approval, so they're trying to manage the dilution by setting a cap for now. To make this deal work, they've initially reserved 1 million shares, and they're asking shareholders to approve authorizing a lot more shares, a massive 26 million shares. This is a crucial step if they want to be able to issue all the shares needed for these convertible notes and warrants. And if they can't get shareholder approval for more shares, they'll have to settle this in cash. That could be a significant cash drain for the company. So the bottom line here is that this deal has the potential to significantly dilute existing shareholders. The sheer number of shares that could be issued is quite large, which could drive down the price of the shares already held by investors. And here's a major point for investors. Even though it's a private placement, these investors are getting secured debt. That means they have a claim on almost all of the company's assets. If ProPhase Labs defaults on these notes, their claims come before any claims from shareholders. But it's not all one-sided. The security agreement has some protections for ProPhase Labs too. The investors can't just seize assets without following specific procedures and giving the company chances to fix any problems. This means that unless there's a clear default after proper notice and a chance to fix things, the company maintains control over its assets. This is important for keeping operations running smoothly. Even the company's CEO, Ted Karkus, and another major investor are playing ball. They've agreed to put their previous loans behind this new offering. and they're accepting limits on getting paid back while these new notes are in place. This shows a unified front in trying to make this financing work, and importantly, the company's board of directors has given this deal their blessing, which is a necessary step in these kinds of financings. Just to note, these securities haven't been registered with the proper authorities yet, meaning they can't be sold publicly without registration or a specific exemption that's standard for private placements like this. This section basically confirms that they're selling these securities without registering them directly with the SEC, relying on exemptions designed for private deals like this. They're counting on the investors being accredited, meaning they're considered sophisticated enough to understand the risks. Beyond the financing, ProPhase Labs is also calling a special meeting for its shareholders for August 2025. The main purpose of this meeting will be to vote on critical proposals likely related to authorizing more shares to facilitate the financing deal we just discussed. So get ready for another big decision for the folks who own ProPhase Labs stock. Your vote will be crucial in enabling the company to move forward with its financing plans and potentially issue more shares. To wrap things up, they filed all the supporting documents for this deal. The different agreements like the purchase agreement, the notes, the warrants, and the security agreement. These are the nitty-gritty details that spell out exactly how this financing works. And the report is signed off by Ted Karkus, the CEO himself, indicating his direct involvement and approval of these significant financial actions. Now, looking at ProPhase Labs, this is a company in a clearly aggressive phase of fundraising to fuel its operations and growth. It's a classic move for companies that need capital to expand or to just keep running. However, the terms of this financing raise some interesting points. The convertible notes with their relatively low conversion price and the potential for significant dilution are certainly areas investors should watch closely. The fact that they're securing this debt with a lien on substantially all their assets is a strong signal of the investors' confidence, but also a stark reminder of the risks involved for the company. If ProPhase Labs can't generate enough revenue or profit to service this debt and the associated obligations, the assets securing the loan could be at risk. The upcoming shareholder vote on authorizing more shares is a near-term trigger for investors. Many shareholders might see this as necessary for survival and growth, while others might worry about their stake in the company becoming less valuable due to dilution. It's a really delicate balance the company is trying to strike between securing its future and protecting its current ownership structure. Overall, ProPhase Labs is clearly prioritizing immediate capital access over the potential long-term impact of dilution and secured debt. It's a high-stakes game they're playing, and the success of this financing will hinge on the company's ability to execute its business plan and generate sufficient returns to manage its debt and hopefully grow its share value. So what's my take on this ProPhase? Appears to be making necessary but potentially risky moves to stay afloat and pursue growth. The secured debt is a double-edged sword, offering stability now but creating significant obligations down the line. Shareholder approval is going to be key, and how that plays out will tell us a lot about the company's future trajectory. Alright, that's our breakdown of ProPhase Labs' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.